So, we're going to start today's session with a conversation with Julie Castro Abrams, managing partner at How Women Invest. Well, welcome, Julie. I'm looking forward to getting to know you. We have been connected on LinkedIn, but we haven't really had one of these deep dive conversations. So,
I
welcome.
cannot, I can't tell you how happy I am to be here. I mean, you're so brilliant and so cutting edge, and your analysis over a long period of time just gives me the goosebumps. So happy to
Thank
be
you.
here.
So, tell me about How Women Invest. Tell me, actually, since this is the first time you're here, tell us about your background a little bit and what leads you to How Women Invest.
Yeah, I actually probably have the most variant background of anybody you probably interview. I come from a justice background. I'm a social worker by training. I have an MBA too, but I don't talk about that. I talk about the fact that I am grounded in social change, and I ended up running. Had a strengths-based approach to poverty alleviation, which is kind of like, okay, you've had all these challenges, but let's redefine who you are. And that redefinition in one of the iterations was running a CDFI, which is a type of a bank, to work with low income women entrepreneurs in the United States, and worked with over 6,000 women to help them start and grow businesses and fund them. And I did that for like 12 years frankly, as a justice and poverty alleviation strategy. And it really opened my eyes to the opportunities for economic growth and development, but also the challenges in the market. There's structural market problems, especially for women. And so after that leadership role, I actually started this huge network of women, almost even opportunistically by accident, whatever you want to say. I'm 57 years old, probably older than a lot of the people listening on this to this. And I'm part of the first huge generation of women like me who have operational expertise and education in vast numbers, and that's contributing to 52% women having 52% of the wealth, which creates a huge market opportunity for us. Women are 45% of the primary breadwinners in heterosexual households. How can we activate those women who are, many of them, entrepreneurial and starting their own companies, but also who have the money to invest in us, in women-run companies? And so I'm trying to do, ecosystem and market-changing actions, including our venture fund.
Okay. And how is the venture fund structured? Is it a traditional LP GP structure?
It absolutely is. Yeah, no question. We have a nonprofit called How Women Lead. And I would say almost all of our investors were touched originally through that network. We place women on corporate boards, et cetera. But that's almost like a backdrop. And our change strategies, how do we move that 2% of all funds going to companies founded by women? And the venture fund is part of that change strategy. It's its own independent, regularly structured venture firm. I am the general partner on 3 funds, an AB fund fully deployed, a seed fund still deploying, and another AB fund that's $100 million. What's unique about us, for one, is we only fund companies founded by women with
Okay.
no male co-founders. So that 2% number is exactly what we're trying to address. Why?
Okay.
Well, for the justice reasons, but women return 34% more for their investors. You were just giving us a beautiful intro talking about, how the market overvalues, et cetera. That doesn't happen to women for lots of reasons, but it's also, if you think about an ecosystem where women are the investors and women are the entrepreneurs, women don't do that the same thing men do, where they sort of have a contest. They don't, and what you see, like the first wave of AI that's kind of crashed, and cybersecurity, and some of the just these different waves you see of, you'll have a surge and a crash. Well, these VCs, somebody, that's a big player, will say, hey, everybody, come with us. We're investing heavily in this space. All the guys glom on, and then it crashes. And of course, there are probably some early winners, but there's also a lot of market problems and poor financial results as a result. Women are actually, both as investors And certainly for what they're building, they're actually there's I did a research study and there's plenty of data on this, that women are really risk aware. They're not risk averse, but they're disciplined. They're not going to throw spaghetti at a wall. They're not going to just follow someone because they say, oh, let's all do this together. Like they're going to be like, all right, yeah, but let me do my homework. They will do diligence, and often the guys aren't. And so it's a very different investment strategy and ecosystem disruption, actually, when you look at what's happening now. In 2010, when you started, there were only 12 women run venture funds in the United States. By
Mm-hmm.
2020, there were 300. It's
Mm.
a whole new market. It's a very different thing. And it's matching the growth of women unicorns. There was I think it was 4 or 5 times like an explosion of women unicorns in 2020 from 2019. Like it had, it bounced a little bit, but stayed pretty level. And all of a sudden you got all these women building big companies, leading in the spaces, not just sort of barely there and following. You're really seeing entrepreneurs step out, and you're also seeing, these women with wealth and agency, who are stepping in to invest.
So let me ask you for a bit of we'll dive down into specifics,
Yeah.
but let me ask, in the deal flow that you're seeing, what kinds of businesses are these women building that you are funding?
They're the same
Or
business. They're all the businesses you would expect. It's so funny to me. People are
so
like,
yeah, there's a
I,
very let me
yeah,
elaborate on the question
yeah,
before you go.
yeah, yeah,
You can say it's the same, and there's a very good reason why I'm
yeah,
asking you this question.
yeah,
You
yeah.
know, in 1 million by 1 million, we follow the philosophy of bootstrap first, raise money later.
Yes,
Whereas
100%.
if you look at a Y Combinator or a Techstars or most of the pre-seed ecosystem,
Yeah.
there let's just stick with Y Combinator and Techstars. It
Uh-huh.
is a blitz scale from the get-go kind
Oh
of
yeah.
strategy,
Oh yeah.
right?
Yes, yes.
So,
But
but
that doesn't happen to women.
these are two very different strategies.
Totally different. Yes,
Totally
yes.
different strategies. And
Yeah.
my take has always been that, women who complain about bias, I've always advised them, don't worry about the bias. Show the goods.
Exactly. 100%.
Bootstrap to validation, bootstrap to repeatability, bootstrap
Right.
to revenue, and you will.
Right.
I have no doubt that investors are going to
Yeah.
be fine with you because
Yeah.
you have the goods.
Yeah. Yeah. As long as you have the goods. Okay. So, well, let me give you the framework, and I can tell you, you and I are very aligned. Just have a different frame from how we're approaching it.
Sure.
So what I know and I see is I've got 75% of my portfolio is either agentic AI or AI as a critical strategy in the last year. Before that, it was less, of course. It's sort of, that's what we've seen in the market largely. I've also got, I have a therapeutic, I have a diagnostic, I have a couple of CPG. It's pretty diverse group, but these are extraordinary companies that are, but they like you just explained very beautifully. The trajectory of their growth is so different, and what happens, and you also look, like, if you look at the last 3 years, it's been a tough time that we're having this conversation in June of 2025. So the last 3 years, you actually, in 2022 about April, there was a market crash and you started to see this slowdown. So I'll give you an example, like of a company that uses biofuels to create the cathodes in lithium batteries in a waterless process. Unbelievably valuable and important, expensive, big infrastructure, long-term to grow. All right. The guys that were her competitors that were behind her in the development cycle got $20 million in 2022, and she got 3.5. And so they scaled up, and they assumed and expected they were going to get another round of funding in the next generally you're like, okay, 12 to 18 months, maybe 24, but you're getting another infusion of investment. Almost all those guys went out of business because the market was down. It was not liquidity. People weren't investing. And she's like the only one standing in many ways. Like, she is it. And
This
so,
is often the case. That's
yeah,
why overfunding kills a lot of companies, and then the
right.
ones who are disciplined and doing it more fundamentals driven end up being the
Exactly.
winners.
Which is really what happens with women. And so women return 34% more for their investors because they're more capital efficient and performance driven. They're disciplined. They don't, you could say we don't have the luxury of being those, just how you described it, that sort of like blitz growth. It doesn't really happen for women very often.
And
And
maybe that's a blessing.
yeah, well, this is the thing. I just want everybody to lean into a cultural framework. Men, and you all know this, you've experienced it in your lives, men are hired, promoted, and invested in for their potential. Women are hired, promoted, and invested in for what they've done. That's why, and we do all this blaming women silliness, and trying to coach women on behaviors where, I'm sure you've heard before where people say, oh, well, you know, women don't apply for the job unless they have all the qualifications. You want to know why? Because that's what the culture told us, and we know I mean, that's what one does. And so I think that it's so important for us to stop blaming women and understand these are cultural frameworks that we have learned. Sometimes we can unlearn them and overcome some of our potentially own ultimate limitations. But the truth is, the market is telling us, and we know this for how people evaluate venture investments. The guys are asked promotion questions. How big can this get? The women are asked prevention questions. How are you going to risk manage? Have you already done this? Are you going to have a baby? Like all this dumb stuff we've all heard about and we all see. It is actually it's connected to this cultural framework. How do you undo a cultural framework like that? You have to reduce bias in the investment process. You got there's stuff we already know from hiring and other things to try and reduce some of that. Somewhere in between the guy with the big potential and the woman with great experience, somewhere in between is who we really should hire, invest, and promote in. you know but right now this sort of binary thing is, it's not good for the economy, for jobs, for innovation, certainly not for women. It's not
So
even great for the guys. We're pushing them out into stuff they're not ready for
I'm
even.
gonna I'm gonna tell you something very encouraging that I think is the market is moving in this direction. Just like I said right at the onset that, when 1 million by 1 million started, we had this philosophy of bootstrap first, raise money later, and the market was chasing financing all the time out of the gate, chasing unicorns and so forth. And now not only is the market coming in our direction based on what you just said, the market is actually coming in the direction of that more deliberate business building. If you look at pre-seed investors these days, even the pre-seed investors want revenue generating companies. So they are looking at what's happening in AI, they're looking at what's happening in no code, and they are looking at all these trends, and they are salivating over these ultralight
Yeah.
startups that are growing really fast,
Yeah.
companies
Yep.
like Midjourney, 12 people company, $200 million in ARR. These are the companies they're salivating over. And, this I think falls very well in the sweet spot of the women that you're talking about, people who really want to do important things and fundamental driven things, right?
Yes.
For us, entrepreneurship equals customers, revenues, and profits. Financing and exit are optional. And as long as we follow that principle, I think there will be hundreds and thousands and millions of women who can build very interesting businesses.
Well, it's kind of interesting. We have everybody sort of like, close your eyes and think what your picture is of the entrepreneur, right? Well, the data is starting to tell us that picture that I bet is in your mind is not actually the right picture. The people who are going to be the most successful are 50-year-olds. I don't know if you guys know that. People who have a lot of experience in business, knowing how to lead teams, knowing innovation cycles, knowing how to scale and grow and do finance and manage a board and manage investors. Building a company is nothing to sneeze at. I mean, you got to know a lot of stuff. And you also have to be smart enough to know who to bring on your team and what you don't know, because no one can know it all. And it's really hard to do that when you're 25 years old. And it's like 25-year-old guy with a hoodie. honestly, there's so many other factors that are trying to help him grow that company that we think we know about. The successful people are the 50-year-olds in the data right now. So if you think about the market and what has happened over the last, let's call it 30 years, right? 30 years ago, you started to have a generation of women who went to college, who delayed fertility and having families, who were the primary breadwinners. All of a sudden, they all have money. And a lot of women get into this moment in their mid 40s. It's called middlescence, where you look up and you're like, all right, I've scaled my career enough. I've done whatever I was going to do with family. And right now, I need to do something that aligns with my values, with my passion. I want to make an impact and do something in the world. And people start starting businesses. I'm seeing it all over the place. So it's
Good.
just
Great.
if you step back and look at the cycle of ecosystem and growth in the country and the world, we're actually at a very interesting, game-changing moment that maybe that's why there's tanks going down the streets around big cities in the country today, because people are worried about us, stepping into power.
So I will push back
Yeah.
on one thing. It's great that more 50-year-olds are starting companies and with all their experience bringing all that to the startup business. That's fantastic. Even the 25-year-olds, whether it's men or women, this ultralight startup trend is very real. People are putting a product out there, product-led growth. They're getting to revenue very quickly. They don't really need to know how to manage a big organization and all of that. And that's also going really well. So I think in many ways, this is a very exciting time for the startup industry because a lot of vectors, a lot of cylinders are firing well, right?
Yes.
The women's movement in the startup ecosystem is firing very well right now.
Yes.
The AI movement is firing very well, and they're reinforcing each other. So this is a good time especially for bootstrap startups.
Yes.
And I'm hoping that this unicorn mania is going to temper down, and there are no exits, right? The market has no exits right now. There's no public, very, very little public market activity. So all these hyper bloated unicorns are sitting there and doing, God knows what. So, so this is actually a good time for the kind of worldview that we share, which is, build businesses with deliberate thought and fundamentals orientation. And that is completely the philosophy of what you were talking about. That is the philosophy of 1Mby1M. Julie, why don't we do a couple of examples of companies that you're really proud of and things that highlight some of the things that you want to highlight about how women invest?
Yeah. Well, I can tell you as a firm, our first fund we kicked off in 2020. And this is the thing, I have almost all individual investors. I have 600 individual investors.
Wonderful.
And the majority, 97%, are first-time investors that are women. I've got a couple guys, I've got a couple VCs that are friends of mine, but mostly these are first-time investors, and I'm introducing them to investing. So in 2020, everyone finally found the paper towels, and we were staying at home, and we needed to do something bigger than ourselves. In 2 months, I raised $10 million. Not a big fund, but a proof of concept fund, right?
Yeah.
I started finding companies. I made investments over the first 3.5 years, and we've sold 3 companies in 4.5 years at good multiples. And return capital to our investors. Nobody in the market's doing that. And so I'm saying this because I want you to understand we discount and don't understand the extraordinary value of both women founders, but also when you prop them up with network access, like, in so many ways, the biggest issue is people don't have access to network. So I'll give you an example of one of these companies. And this is for the founders here. Hang on, listen till the end of the story. Okay. So there was a woman who is a chief human resource officer at a public company. So if you've worked in industry, you got big budgets, you pay big salaries, you got big structural systems. A lot of people get reinforced from moving paper from one side of the desk to the other, figuratively. And she in her firm, they created an innovation that's great. And and the firm was like, we're not going to keep investing in this. She's like, well, can I take it and run with it? And I'll go be I'll leave my job and I'm going to be the CEO. Just give me all the IP. So when I met her, I was like, wow, this is a fantastic deal because the product is actually really well developed for a brand new startup. And so we got in and invested, but pretty quickly realized, oh dear, this person has a different lens of how to run this company. There's no way this is bootstrapping startup like you're talking about. She was making decisions that a public company CHRO would make. She was on the boards of a public company. And so the lead investor and I had a conversation. It was like, all right, well, we're going to need to bring someone who knows how to build a startup, and we need to address some of these budget problems. Like you can't pay a CTO and a CFO that much money. And so I brought in one of our LPs, actually, who had been in a bunch of startups, to be the COO. 6 months later, it was pretty obvious that the person was struggling to listen, and there's too much friction, and we weren't making enough progress. So I worked with my team, helped secure a major $10 million opportunity for a client. This person became the CEO of the company, and we moved the original CEO out of that role. I can't remember what we called her. Maybe she became the chair or mayor. I don't know, some word, but just for 6 months so we could get it to a sale. Because we needed to exit this company because the leadership wasn't going to be able to lead it. And we sold it for over 2.5 times in just 18 months, which is a fantastic internal rate of return if anyone knows venture. So the founder made $22 million. The woman we removed from her seat as the CEO made $22 million. This set her off in a whole nother life path. And I share that because I think it's so important for people to really understand like the different elements of how you, as a VC, how you work with a company, how you help you help it with enterprise introductions, you help them with thinking through, like, should we sell now, should we grow? Like there's all these elements that you have to be thinking about, and having a group of people in my back pocket to step in as the CEO or to bring clients or etc. All of these are really critical and important elements of being a good VC.
Yeah, very cool. Very cool. That's that point that you just made is something that I'm making a lot. You must be seeing this in my LinkedIn feed, is that small exits is the bread and butter of venture.
Yeah. Well, we've had 3 over 2 times, between 2 and 3 times. That's really freaking good in the first 4 years.
2 and 3 times is great.
Yeah.
What I'm saying is the
and we haven't lost any.
96% of the exits in venture are sub $100 million exits.
Yeah.
So this obsession about unicorn and billion-dollar valuation and billion-dollar exit needs to stop. It's just confusing entrepreneurs.
Yes. Yep.
Okay.
Well, and it also, like, by doing that, what you're saying is you're not going to help that company that we helped sell because it's not a unicorn. But in fact, we made good money on that, right?
Well,
but I had to take a lot of my time to help problem solve, deal with the emotions, bring in new client, bring in an enterprise client that's significant, like really help that company.
Yeah. Well, and especially for a small $10 million fund, this kind of exit's perfect.
Yeah. Yeah. And I'll tell you, our first time investors are really happy. And now they're like, oh, venture actually works. What you said worked. They got we're not even close to the harvesting period and they're already making money.
Yeah. How many deals do you see in a year?
I'll probably see about 600, I think. And we'll make maybe 1 to 2% of the investments we see. I'm investing from 2 different funds right now. I'm investing from a seed fund and an AB fund. So I should make 6 seed investments this year, between 250 and 500. I could make as low as 100, but probably not in this life cycle of the fund. We're getting too advanced in the time frame of that fund. And then in my third fund, we'll invest up to $5 million in between 1 and 5 with 7 to 9% ownership.
And geographically, you invest all over the US, all over the
All
world?
over
What
the
is it?
US.
All over the
Only
US.
the US. Yeah,
Only the
all over the
US.
US. Only the US. You know what? For everybody who's an international company, it's not because we don't love you, but the tax implications start to kill your returns.
But that's okay.
And the
Sure.
growth
You have to
structures
make
become
some
really hard.
constraints. Absolutely.
Yeah. Yeah.
And where are you located?
I'm in the Bay Area.
And the limited partners are all over.
They're all over the country. And I have limited partner, and I travel all the time. So I have boards for a nonprofit, and almost everybody involved on my boards and my nonprofit are investors in my funds. So in New York and Chicago and Minnesota and DC and of course all over California. So
Great. Awesome. Julie, it's been a wonderful conversation. We're coming to the end of the time that we had asked for from you. So you're very welcome to stay on, and we're going to listen to actually a woman entrepreneur, Nikki Cow, next.
fantastic.
So let me move us to that phase of the discussion. But I have, Maureen, I have emails from messages from uh, Prashant, who's asking, how do I send you my slides to you? Prashant, you need to send your slides to Maureen. So could you please work behind the scenes with Maureen, get the slides over, and we'll figure it out. Let me start working with Nikki, and then we will figure out how to work with you once you get your slides to Maureen. And Funny is asking a question to Julie. Could you please talk about some of the failed ventures and what learnings came out of them? Do you want to take that question, Julie?
Sure. Um, uh, you know, I think that, I mean, I don't have failures. I have challenges and resets that are struggling. And you know, there are market things you can't control. Like I have somebody who created, oh gosh, this woman, she's so lovely. She created this company, and then she had a second baby, which only I'm telling you this because it contributes to part of the story. Then she had a warehouse. She had a flood in her warehouse, ruined all her inventory. And she was in a pivot with her company. And then she had some challenges to her IP. And then what she was creating was a DNI tagging mechanism for 10,000 entrepreneurs. And of course, with everything all the anti DNI stuff in the United States, the entrepreneurs then were like, "Please don't tag me because I don't want to get targeted." And so all of a sudden, the market forces, the environment, the different things, and her having, the little what ended up ultimately being a little postpartum depression, all of it came together, and just like, oh my God, this poor woman. So I personally hired her an executive coach and have done a bunch of stuff to support her. I think she's going to pull out something. She's not going to meet what she originally planned, but you can't blame her. Like that's that's really challenging. I've also had some founders who um were challenging personalities, and sometimes I'm looking for a personality test. I have somebody who yelled at her investors on a call, and and one of them stormed off on the call. There are weird behaviors that come from women and men. I think less with women often, but this particular person, she just she's kind of alienated everybody. And you're like, well, how could her clients possibly be getting if she treats her investors like this? What's she doing to her clients? So, the solution was great, but her behavior, it felt to me a little off, in terms of how she was managing not
So,
a little off,
I'm
big
gonna
time off.
kind of synthesize a little bit of what she's saying, Funny, for you. You know, just because you're doing a startup doesn't mean you shouldn't be professional, number one. Number two, you have to manage your stress. And if
Yeah,
you
of course.
overburden yourself with stress, you know, this is coming from a woman. Why would you want to take on everything at once? That is not good life management. It's not good life skill, you know? You have to risk manage. If you want to be successful as an entrepreneur, you have to risk manage. And risk managing means that you have to manage your stress so that you can run a marathon, not a sprint. So,
Well, that is, of course, the case. But I guess I would just point out, like, look at what's happening with the President of the United States right now. I'm sorry, it's not about being political, but this erratic, bullying, bizarre behavior, it's somehow seen as an asset, and he's a deal maker, and he's growth. You can get bamboozled by people with their I love strong women. So I get, bamboozled by like a super strong go-getter woman, and then you have this moment where you realize it's toxic. It's actually not good behavior. And I'm not sure that's about managing her stress as much as it is she's probably a
no, I was
narcissist and
talking
got some
more
problems. But
managing
um,
stress. I was talking about having a second
yeah.
baby in the middle of doing a startup. This is not very good decision making. I'm sorry.
Oh, I have a bunch of people who've done that successfully. So I would push back a tiny bit on that. I literally had my second child, and I was uh, in labor, having calls with people. And I'm not saying anyone should plan to do that, but you can. I think a lot of people, to me, I hate when people think having a baby somehow is a problem, but it can be a contributing factor. If you've got postpartum depression, you have a flood, the world changes in a different direction, and your whole strategy no longer works. It's like, it's a lot to take on all at once. But
All right, I think time wise we're out of time for this segment, Julie. Thank you so much. It's
yeah,
it's been great. Stress
good.
management is a requirement. It's not optional to do a
Oh,
startup, right?
absolutely.
That's
Well, and
that's
I want a personality test that tells me if someone's going to go off the rails. A stress management of a normal person's one thing. Someone being kind of a narcissistic, bad behaving human is another.